Friends, now we are going to learn the concept of seamless flow of credit under GST system. And you already know by now that uh, when a supplier purchases something or avails some input services, he gets a credit which is called as ITC, that is input tax credit. This input tax credit must be appearing in the supplier's electronic credit ledger. And this electronic credit ledger balance can be utilized in settling the tax payable on out, right? On outward supply, whatever is the tax liability, that can be paid either through cash or by utilization of input tax credit, which is available in the electronic credit ledger. This is how what happens, the credit flows from one person to another person. That means what is output tax for one person, that becomes input tax for another person, right, in the chain of supply. Finally, the ultimate consumer bears the impact of GST because he cannot transfer it further. He has to absorb. He has to absorb the burden of GST. He is the consumer. Okay, and GST, you already know, is a destination-based tax. So ultimately, the tax which is collected by the government is given to the state which is consuming. Okay, so all these concepts we know. So today we'll try to understand that how this flow of credit happens very smoothly. And this is called as the seamless flow of credit. Why it is seamless? Because we'll find out there is no break in the chain of credit. That is what we are going to understand. Let me share the screen with you right now. Okay, so if you look at this picture also, you can understand that you see SGST, UTGST, all these things are collected and they are shared among states and center. How they are shared, that concept will be more clear to you once you understand. And before that, this fundamental understanding on CGST, SGST, UTGST, IGST, we are already having, we have discussed this earlier. This slide is from some earlier class. You know, whenever goods are coming from a foreign territory to a state, IGST is levied. And whenever goods are coming from one state to another state, again, IGST is levied. When goods are, let's say, supplied from one state to an union territory, then also IGST is levied. And when goods are supplied from a foreign territory to an union territory, then also IGST is levied. These are various situations when IGST is levied. And you also know within the state, whenever there is a transaction, there is a supply, CGST plus SGST. These are the two things which are levied when goods are supplied within the state. CGST plus SGST. Okay, you know it or not? You are aware of it? We have discussed all these things earlier, is it not? And in the other state also, in any state, whenever there is a supply within the state, which we call it as the intrastate supply, then again CGST and SGST will be there. But if there is an intra-union territory supply, then CGST plus UTGST will be there. And this concept we know, right? So that means for interstate transaction, IGST is levied, and for intrastate transaction, CGST is levied. Sorry, CGST plus SGST is levied. And for intra-union territory transaction, CGST plus UTGST is levied. I think this concept is clear to all of you. Okay, this is the background on the basis of which we'll be moving ahead. Okay, is it clear to you, or you still have some doubt on this? Is it clear? Yes or no?
Yes.
Now, next concept also we know that once input tax credit is available, how this can be utilized. Input tax credit may be available in the form of IGST credit, in the form of CGST credit, maybe in the form of SGST credit. Okay, SGST and UTGST, we are taking it as one category. So under this category, input tax credit may be available. That IGST input tax credit can be utilized for settling the tax liability of IGST. CGST tax liability can be utilized for settling the tax liability of CGST. SGST tax input tax credit can be utilized for settling the tax liability of SGST. Okay, these three things you already know. In addition to that, IGST credit can also be utilized for settling the tax liability of SGST. That also can be utilized for settling the tax liability of CGST. Okay. And CGST credit can also be utilized for settling the tax liability of IGST. SGST credit can also be utilized for settling the tax liability of IGST. This is the maximum thing which is possible. Okay. Now this gives an understanding that CGST cannot be utilized for SGST. SGST cannot be utilized for CGST. Okay, this understanding you are already having. We have discussed this thing earlier also. Is it clear to you? Yes or no? Keep on responding. Is it clear?
Yes, sir.
Okay. Now, next concept, which also we know, that how input tax credit can be utilized. So credits may be available in the form of IGST, CGST, SGST. And we have discussed this IGST needs to be utilized first. First, you pay IGST, then you may pay CGST and SGST in any proportion. That concept also we have discussed again. Okay. And only after utilizing IGST, go for utilization of other GSTs. Okay, we have taken some examples here. This concept was also made clear to you. In earlier classes, this also we have discussed. Okay, we have done some exercises also. Hope you have remembered this. Is it clear to you? Yes or no? Is it clear? Okay, thank you. Now, with that background, we'll be starting this concept, that seamless flow of credit. Try to understand. This is a very important concept. You know that GST is a destination-based tax. Okay, and the tax which is collected ordinarily accrues to the consuming states. The state where goods are consumed, that state takes the revenue collected through this tax. Okay, so this picture it shows, we can look at this picture, look at this chart, it shows like this. IGST, CGST, SGST may be available in the form of input tax credit with a supplier. If the supplier is making, let us say, interstate supply, then he will be charging IGST. His credit may be available in the form of IGST, CGST, and SGST. But the liability which will be paid by him will be in the form of IGST. Then what is possible? All these three credits can be utilized for discharging this IGST liability. Okay. And let us say someone is purchasing from that dealer in another interstate supply. That person might be having IGST credit. Okay, IGST credit. That IGST credit can be utilized for settling IGST, CGST, and SGST. Let me explain you with the help of the whiteboard. First, let us take an example. Let us say someone is from this particular city. Let us say someone from the city Bhubaneswar. He is purchasing things locally. When he's purchasing things locally, and maybe some purchases from interstate transactions also. So if you look at his credit ledger, the credit ledger may be containing some IGST credit, from CGST credit, some SGST credit. His ITC ledger may be containing all this. Is it? But let us say he is making only interstate supply. if he's making interstate supply, his liability only will be, let's say, making only interstate supply. Now he has to pay only IGST. So all these credits can be utilized for settling IGST. Okay, he will not be losing. Now you see, someone is purchasing from, let's say, another dealer. Who is purchasing? In his books, the credit will be IGST. Let us say someone is purchasing from another state. Let us say this is from Bhubaneswar. This is from another state. Let us say this is from Kolkata. The Kolkata purchaser, when he purchases, in his ITC, in his input tax credit ledger, if you see, you'll find out only IGST will be there. And let us say he is selling within the state, within West Bengal, he is selling. So his liability will be in the form of his input tax credit will be IGST, but his liability will be what? Maybe CGST, SGST, maybe IGST, if he is also making interstate supply. So this IGST which is available in credit can also be utilized for settling CGST, SGST, IGST. That means no one is losing. The credit available in this form can be utilized for IGST. Credit available in IGST can also be utilized for settling CGST, SGST, and IGST. This process is therefore towards a seamless flow of credit, meaning there will be no break in the flow of credit. Okay, in the credit chain will not break. Did you understand this? Same thing I'm trying to explain with the help of this slide. Okay, now let us understand this thing again. The interstate supplier in the exporting state means state who is selling, who is supplying. You have to understand it in that sense. Exporting doesn't mean that goods are going out of the country. The interstate supplier in an exporting state is allowed to set up the available credit in the form of IGST, SGST, or IGST, CGST, SGST, or UTGST in that order against IGST payable. If there is an interstate supplier, he will be paying IGST. The whatever IGST is payable, he can use the credit which is available in the form of either IGST or SGST or CGST or UTGST. All these things can be utilized for paying IGST. Okay, that means I'm talking about this part of just chart. Suppose there is an interstate supplier. He has to pay IGST. You can use all these things, IGST, CGST, SGST. If UTGST is available, that also can be utilized. Okay. Now, buyer in the importing state means the state who receives the goods. Okay, is allowed to avail credit of IGST. Suppose there is a buyer, he is buying from interstate sale. When he is buying from interstate sale, his credit will be only IGST. But his tax liability will be maybe CGST, SGST, or ITGST, and maybe IGST. So this tax liability can also be settled by utilizing IGST. Okay, so this is the concept. Why in our country this dual tax system is levied, or 3 types of taxes levied. You can easily understand, right? So for settling the liabilities in the form of IGST, CGST, and SGST, input credit which is available on IGST can be utilized. Similarly, for the settling the liabilities of IGST, input tax credit which is available in the form of IGST, CGST, and SGST can also be utilized. Okay, so that is why it is said under GST regime, there is a seamless credit flow in interstate supplies. In interstate supply, definitely there is a seamless credit. And interstate supply also, you can find there is no restriction. Credit can flow smoothly. Okay, are you getting it? Yes or no? Hope you have understood this point. Now, one more step we how revenue is distributed. You see, the revenue of interstate sale does not accrue to the exporting state. You already know that GST is a destination-based tax, right? So the state where goods are consumed will get the benefit of the tax collection. Center will give tax to that state where goods are consumed. So the revenue of interstate sale, suppose there is an interstate sale, who will get the benefit? The consuming state. Okay, the benefit will not accrue to the exporting state. The exporting state transfers the center to the credit of SGST, UTGST used for payment of IGST. So you see, center, whatever IGST is collected, that should ultimately go to the state where it is consumed. Okay, but in case that collection is less, IGST collection is less, why it is less? Because SGST is used for discharging liability, discharging IGST liability. So therefore, IGST collection will be less. You know, SGST can be utilized for discharging the IGST liability. IGST should go to the consuming state. But in this situation, what will happen? The exporting state transfers to the center the credit of SGST or UTGST used for payment of IGST. Right? Did you understand this? So IGST is payable on interstate condition. But if that is paid by utilizing SGST, then that state should contribute that much of money. That much of money means money. That means that portion. That means money, or you can say the portion of SGST which is utilized for discharging IGST liability. That money the state will pay to the center. Okay. So once I repeat, the IGST or UTGST used for payment of IGST will be paid by the state to the center. The center, what will do? Center will give that thing to the IGST used in payment of SGST and UTGST. That will be understand. First, in this part you have understood, I think. SGST or UTGST used for payment of IGST will come to the center. Now what happens after that? The center transfers to the importing state, the state which imports, which receives. Okay, transfers to the importing state the credit of IGST used for payment of SGST and UTGST. Okay, so the state who is receiving, the recipient state, he has got a share of SGST. He should get the SGST. But in case some IGST is used for discharging the liability of SGST, then to that extent, the center will give that part of IGST to the state who is receiving. Okay. For example, you see, one state is supposed to get the entire SGST collection. But because IGST is used for discharging SGST liability, his SGST collection will be less. So therefore, what will happen? Center will compensate that. Center will pay, center will transfer the money. Money means how much money? To the extent IGST is utilized for discharge of, for payment of SGST. Center will give that much money. In this process, the credit chain does not break. This ensures seamless flow of credit under GST in case of intrastate as well as interstate supplies. Hope you have understood this concept. I again repeat, SGST, UTGST used for payment of IGST has to be paid by the state to the center. And IGST used for payment of SGST and UTGST shall be paid by the center to the state. This is how tax collection moves. To understand this thing, let us learn an example. Let us take an example. Okay, first we'll take a situation. First illustration is about the intrastate supply. That means within the state there is a supply. Please be attentive and watch it carefully. We are talking about the interstate supply, intrastate supply. That is about the local supply of goods and services. And under dual GST system, you know, CGST as well as SGST is to be charged. Here, example is that suppose goods or services are supplied by A to B. Okay, let us say value of taxable supply is 10,000 rupees. Okay, intrastate supply. So CGST as well as SGST will be levied. For simplification, we have assumed CGST is 9%, SGST is 9%. So CGST will be collected 900, SGST will be collected 900. Total value of the invoice will be 11,800. Okay. And we'll assume this is the fastest supplier. There is no input tax credit. If that is so, this 900 will be deposited by the supplier in the respective accounts. That means 900 will be deposited in a CGST account. 900 will be deposited in SGST account. Okay, both central government and state government has their appropriate accounts. In that, this will be deposited. Earlier, you must have seen the GST challan. You see, each tax is deposited separately. Means in the challan, it clearly shows how much of CGST, how much of SGST is deposited. I'm showing you an example. You see, in the previous session, we have made a deposit. And in the deposit, you must have observed that challan looks like this. This challan, if you see this much of CGST is deposited, this much of SGST is deposited. Okay, IGST is not deposited here. This money go to different accounts. Okay, this is one account, CGST one account, SGST is one account. So when a local seller, a local supplier collects CGST and SGST, he deposits both the amount under different headings. Okay, I think up to this it is clear. You have understood this thing, how it is collected. Next step for that is, now first example we have seen A to B, that means A has supplied, B has purchased, B has received that goods or services. Now next step is that supply of goods and services by B to C with a value addition of 20%. Okay, now B is selling to C within the step. This is again interesting. Okay, now what will happen? Since B is a dealer, B has already paid tax on, paid GST on its input, then B will be availing credit. Okay, he will avail CGST and SGST paid by him on purchase of goods and services, and he is going to utilize such credit for setting up his liability. Now let us come to B's liability. When B is selling with 20% value addition, his base value is at 10,000. Now he will be selling it at how much? How much he will be selling? But it will be the base value or taxable value with 10% value addition. Sorry, with 20% value addition.
12,000.
12,000. On this 12,000, now he will be collecting CGST 9%, SGST 9%, because it's again interest. So he'll be collecting 1,080 rupees CGST, 1,080 rupees SGST. So his total invoice value will be 14,160. Okay, 14,160. And what he will be doing, he need to discharge this liability of 1,080 CGST, 1,080 SGST. But how he will be discharging? He is already having credit. How much credit he is having? In the previous slide you have seen, the credit he is having is this much, 900, 900, he is having credit. Okay, did you understand up to this? Please tell me, we'll move little slowly so that you'll be able to understand the complete example. Up to this, is it clear to you that when B is selling, he has to pay 1,080 rupees CGST and 1,080 rupees SGST. Now, how he will pay? Let us understand this thing. Now, if you see what B is doing, CGST is payable 1,080. He is already having CGST credit 900. So, how much he has to pay in cash? How much CGST is payable in cash?
180 rupees.
180.
180. Now coming to SGST, also same thing. SGST is payable 1,080. Credit under SGST is available 900 rupees. So how much SGST is payable in cash?
Same 180 rupees.
Same 180 rupees. Okay. Here rate are 9%, 9%. We are thinking. Okay. So 180 rupees is to be paid in cash. Now we'll see how much is the collection of government, how government is collected. Let us go to the government's collection. Now this particular table, watch it very carefully. Okay, now you see. Let us see how much money is earned by these governments. Statement of revenue earned by the center and state governments, let us see. Okay, now look at this table. It talks about, first column talks about transaction, Second column, revenue to central government, how much money central government is getting. Second is revenue to state government, how much it is getting. When there is a supply by A to B, central was getting how much and state was getting how much? First supply, A to B, interstate transaction, value was 10,000 rupees, the taxable value. How much money central was getting, how much money state was getting in that transaction? B has deposited that money. How much money? 900, 900. At the next stage, when it is sold B to C, okay, supply of goods and services by B to C, then how much money is deposited? Now B has collected from C and B must have deposited. First, this 900 is deposited by A, 909. But then when B sold to C, B deposited how much? B utilized this 900. But in addition to that, he had to deposit. How much he had to deposit?
180.
180, 180. So if you see the total collection is how much? Total collection of central and total collection of state.
1,080,
1,080 rupees. And this was the value you see. 900 rupees. This was the GST payable. CGST was payable 1,080. SGST was payable 1,080. Both the governments got the full value. And in between what happened, the credit which is available got adjusted. Okay. Finally, whatever is the ultimate tax that is collected by the center and that is also collected by state. Okay. I think this was so simple example. All of you must have understood. Is it clear to you? On intrastate transaction, you see government is not losing anything. And suppliers are paying tax only on value addition. This concept is clear to you? Yes or no? Did you understand this?
Sir, I have a question, sir.
Yeah, please ask your question.
Sir, in each subsequent supply,
Yes.
the individual supplier deposits the amount of money with the government in each subsequent supply.
Yeah. Each supplier deposits money with the government. For example, first case it is supply by A to B. Who will be depositing? A will be depositing. This 900 rupees is deposited by A. Second, B is supplying to C. Who will be depositing? B will be depositing. This 180 rupees is deposited by B. Suppose B sells to C. If C is the consumer, B is not going to deposit. But if C sells to B, C sells to D, then again C has to deposit. So as you are saying rightly, that each supplier in the value chain, each supplier needs to deposit his part of tax with government. Okay. Is it clear to you?
Yes, sir.
Okay. Now we'll add little complexity to this. So this was purely an intrastate transaction. Now from intrastate, we'll move to intrastate. Now watch it carefully. I'll be now moving to an intrastate transaction. Now please watch it. Now on intrastate transaction, you know, IGST will be levied. So first we'll take an example of intrastate, then we'll go to intrastate. Now first you see this example is that there is a person, Mr. X, located in state of Odisha. Okay, he's selling the product to A, again within the state of Odisha. That means from both the places are in Odisha. That means it is intrastate. So first let us take this intrastate, then we'll move to intrastate. Now let us assume the taxable value is 10,000. Okay. CGST is 9%, that is 900. SGST is again 9%, is 900. So total value is how much? How much is the total invoice value? Can you reply? Unmute and speak.
11,000.
11,800. Now you see, this supplier has to deposit 900 under CGST account, 900 under SGST account. Who will be depositing this money? X or A? This 900 will be deposited by whom?
Selects.
X, because X is the supplier. X will be collecting from A and will be deposited by X, right? Now, let us go to next stage. Next stage, we will assume situation is like this. Okay, now what happens? The A of the state of Odisha now selling the same product to B of state of AP, Andhra Pradesh. Now this is an interstate transaction. So which tax will be levied here under GST?
IGST.
IGST. Okay, and he is selling it with a value addition of 20%. So the taxable value will be 10,000 into 120%. It comes to 12,000. You can see taxable value is 12,000 rupees. Now, since the supply is made to a different state, to a customer in a different state, in the state of AP, so IGST will be levied at the rate of 18%. Okay, and 18% comes to 2,160. Now the invoice value becomes 14,160 rupees. Now this IGST will be deposited. Who will be depositing this IGST? B or A?
Yes, sir.
A will be depositing because A is selling. A will be depositing that money. But A, how will be depositing? 2,160 is his liability. But you know, he is already having input tax credit. Input tax credit, how much? Now, if you look at here, input tax credit is having 900 CGST, 900 SGST. We will be utilizing that. We'll see how much tax is payable to the government. If you look at here, you can understand IGST is payable how much? 2,160 minus CGST credit available how much?
900.
SGST credit also can be utilized. They are also available 900. So how much IGST is payable in cash to government?
So 360.
360 ultimately has to pay. Okay, 360 has to pay. Now what has happened? What has happened? Now you see, IGST charged by B. This 360 is paid by whom? Who is paying this? A is paying. Is it? A is collecting from B and paying. So IGST charged on B from the state of AP. You see, consuming state is which state? Andhra Pradesh. So AP should get the benefit of GST. Now what will happen? The IGST charge on B of state AP for supply of goods and services will be remitted by A of state of Odisha to appropriate account of the central government. Now you see, this 360 rupees is deposited in the form of IGST. Okay. And center will pay this 360 rupees to whom? To which state?
To the state of Andhra Pradesh.
To state of Andhra Pradesh. But now you see, actual IGST is how much? 2,160 rupees. But these two things are utilized. Because of these two things, SGST and CGST, actual IGST liability is reduced. Now what will happen? CGST is anyway going to the central government. Now state of Odisha will transfer the SGST credit, this much of SGST credit, okay, which is utilized for discharging IGST liability. That has to be transferred to the state, to the center. The state of Odisha, the exporting state, will now transfer the SGST credit of 900 rupees utilized for the payment of IGST to the central government. So the central government, what will get? Central government is getting directly 360 rupees from IGST. CGST is getting 900 rupees. And the SGST, Odisha state has to transfer to the center 900 rupees. Did you understand? Because here in a situation, SGST is utilized for discharge of IGST liability. Okay. Understood? Yes or no? Are you getting it? I'll move to the next stage. If it's not clear, I'll repeat it once again. SGST, which is utilized for discharge of IGST liability, has to be transferred by the exporting state to the center. And that is going to happen here. IGST payable was 2,160. But for discharging that liability, 900 rupees of SGST is utilized. So now this has to be paid by the exporting state to the center. Now, let us come to the next stage. Next stage, what happens? B of state of AP. Okay, now next stage, what exactly happens? Supply of goods and services by B of state of AP to C of state of, that in Andhra Pradesh. Now what happens? B is selling to C. Okay, B is selling to C. Understood? Now B will avail credit of IGST. B is having IGST credit paid by him for purchase of goods and services. That will be utilized. He will be using such credit for settlement of CGST and HGST payable because he is selling to another person in the state of AP. So now he has to pay CGST and HGST. But how he will be paying? He's already having IGST library, IGST input tax credit that can be utilized. Let us see this example. Okay. Now what B is doing? B is selling to C with a value addition of again 20%. So now the taxable value becomes 12,000 into 120%. How much is the taxable value?
14,400.
14,400. And since this is an intrastate sale, he will be charging CGST 9%, HGST 9%. So CGST amount comes to 1,296. SGST amount comes to 1,296. Total invoice value will be 16,992. Okay. Now B is supposed to pay this, deposit these two amounts under two different heads. But since B has purchased through an interstate transaction, B is having IGST credit. When B has purchased, he has paid IGST. And IGST credit is available. How much IGST credit is available? 2,160 IGST credit is available. And he has to discharge CGST and HGST. And you know, IGST can also be utilized for discharge of CGST and HGST. Now, what exactly B is going to do? We understand that CGST payable is 1,296. Less IGST credit is available. So we'll say 1,296. Okay, so CGST payable to central government is nil. Coming to SGST payable, 1,296 again payable. Remaining credit available in IGST, because IGST total credit available was 2,160. Out of which you see 1,296 is paid here, utilized here. Balance available is 864. So 864 IGST will be using. So SGST payable to the state government is 432. This much money will be paid to state government in cash. So what B is exactly going to do? CGST he need not pay anything, but SGST he has to pay 432. He utilized the entire IGST, but still 432 rupees has to be paid because he had made a value addition of 20% on that, whatever is GST payable that he has to pay in cash. Understood this concept? Now, this is a situation when IGST is utilized for settling SGST liability. Okay, right? Now, if you look at the revenue collection of different governments, here I am showing you in 3 columns. Revenue of the central government, revenue of the state of Odisha, revenue of the state of AP. Let us see transaction-wise detail. First, when supply was made by X to A, X has paid 900 rupees to center and 900 rupees to state. When supply was made A to B, A of Odisha to B of AP, interstate supply, only 360 rupees was deposited in center's account under IGST. And in addition to that, what has happened? Okay, since IGST was reduced because of use of SGST, what will happen? Odisha government will be transferring 900 rupees to central government. So Odisha government share is reduced 900 rupees. Center got 900 rupees. Next is what happened. Supply of goods by B to C. When supply was made by B to C, 430 rupees was deposited in state of AP. But state of AP's revenue got reduced because why? IGST is utilized for reduction of SGST. So now what will happen? Center will pay to AP. So center is going to pay 864 rupees. 864 rupees, what has happened? 864 rupees was the IGST credit which is used. And because of this credit, SGST collection got reduced. So what will happen? 864 rupees is paid by center. Center's revenue will be reduced to 864 rupees and it will be paid to Andhra Pradesh. Finally, you see, center's revenue collection is 1,296 and state's revenue collection of Odisha is nil because Odisha is not the consuming state. Ultimately, goods are consumed in Andhra. So Andhra is also getting 1,296. Did you understand this example? Or should I repeat it?
Sir, from here we can conclude that the increase in the SGST of the state is possible only if the consumption is done in that same state.
Yes, yes. So that is the philosophy of this GST system. So we have already moved to destination-based tax, not on production-based tax. Okay, the state where goods are consumed, that state deserves the share of revenue. The state which is where it is produced, that state will not get the revenue. Okay. So that is the situation when GST was first implemented. So, you know, in our country, there are many states, you can say production dominated states when goods are produced. Okay, Gujarat, Maharashtra, etc. There are many states where, which are, you can say, consumption based states where goods and services are consumed, like Odisha, Bihar, West Bengal, etc. So there was an apprehension that the producing states will be losing revenue and the consuming states will be gaining revenue. And to adjust that, the center has initially agreed to compensate those producing states. But the concept here is that, philosophy here is that we are moving towards the consumption-based states where goods are consumed, that state deserves the benefit of tax. Okay, and in case, let us say, SGST is utilized for reduction of IGST, then states should pay that much money to the center. And in case IGST is utilized for reduction of SGST, the center should give that much of money to state. This is how accounts will be, let us say, reconciled, accounts will be adjusted, and each state will get their fair share. Did you understand this concept? Quickly, let me recapitulate that thing for you once again. In this process, we'll see that there is seamless flow of credit. And this is how revenue between the states are adjusted. Okay, I repeat what we have discussed so far. SGST, UTGST used for payment of IGST has to be paid by state to center because center's IGST collection got reduced. And IGST used for payment of SGST or UTGST has to be paid by center to the state. Okay. Right. And in case of an intrastate supply, there might be CGST credit, there might be SGST credit. The CGST credit, SGST credit are deposited under different accounts. Okay, CGST under CGST account. Okay, code 005. SGST for Odisha, you see, code 0006 are deposited into different accounts. Okay, and if subsequently same goods are sold within the state, okay, with a value addition, then on that supply, CGST and SGST will be paid. CGST and SGST liability will arise, and that liability can be set off by using the input tax credit which is available. And if there is some difference, if liability is more, that amount has to be paid in cash. In this example, you have already seen. Earlier, when it was purchased, so 900 rupees SGST and CGST was given. But when they're supplied again, so 1080 and 1080 was that liability. And this has to be settled. The difference 180 rupees has to be deposited in cash. Okay. This is the interstate transaction. And if you see in this kind of transaction, the center's revenue is 1080 rupees. State's revenue is again 1080 rupees. And in case of interstate transaction, situation changes. So long as it is within the state, then CGST and HGST will be collected. And if it is moved beyond the state, goods are moved beyond the state, then IGST will be collected. But when IGST will be collected, IGST needs to be paid. When IGST needs to be paid, that CGST, SGST credit needs to be adjusted. To the extent SGST credit is applied for discharging IGST liability, that exporting state should compensate that money, so transfer that much of money to the center, because center's IGST collection is reduced by that extent. That is the first concept. So how much is IGST payable, we have to find out. CGST credit is adjusted, SGST is credit adjusted. This SGST credit has to be paid by the exporting state to the center. Okay. Now again the same goods which has come through interstate sale, if it is sold intrastate, then what will happen? The IGST credit now will be utilized for discharging the liability of CGST and SGST. Now, to the extent IGST credit is utilized for settling SGST liability, to that extent, center will pay money to the state because state's collection got reduced. Okay, that is the concept. So if you see this picture, again, goods are sold as 14,400 is the taxable value. CGST is charged, SGST charged. For this CGST, SGST can be paid by utilizing input tax credit. When you utilize IGST, we find CGST is fully adjusted. And to the extent SGST is there, only 864 rupees available on IGST. So that has to be paid by utilizing IGST. Now this 864 rupees has to be paid by center to state. So that state's revenue is not getting affected. If you finally do this computation, you can find this entire transaction, the revenue is shared between the center and the destination state. Okay, in this example, you see when supply was made from X of Odisha to A of Odisha, 900 rupees deposited the center, 900 rupees the state, because till that time Odisha was the destination state. So these two are shared by equal. But after that, when the goods moved from Odisha to Andhra Pradesh, then revenue collection was 360 rupees for the center only. Okay. After that, what has happened? The goods moved to Andhra Pradesh. So Odisha government, whatever he has collected is 900 rupees. 900 rupees Odisha government transport to the center. Okay. Now, when goods again sold by B2C in the state of Andhra Pradesh, so Andhra Pradesh state tax was collected to the extent of 432 rupees, and state government, sorry, and central government transport 864 rupees to the state of Andhra Pradesh because goods are consumed in Andhra Pradesh with a value addition. And 864 rupees was utilized, 864 rupees of IGST was utilized for discharging its GST liability. So that much of money central transport to the state. So finally, the collection of revenue is distributed between center and state equally. Hope we have understood how revenue is shared between the state and how the process ensures that credit transfers smoothly in this chain, and there is no break in the credit chain. Is it clear to you? Hope you have understood this thing. Thank you very much. We'll catch up in our next class with a new concept. Thanks a lot.
Thank you, sir.